Welcome back, everybody. If you're new, my name's Nicholas and this is Investing Against the Grain. Today's episode is all about Tesla Q2 2021 earnings preview. So what we're gonna do is we're gonna go ahead and take a look at the analyst averages and see what they expect from a high and from a low. And then we're gonna compare that to the numbers I have on my spreadsheet. Okay, so again, if you enjoy this type of content, do us a favor, hit the like button, hit the subscribe button below. It really helps the channel. And with that said, let's go ahead and get into it. So Tesla will be reporting their Q2 2021 earnings on Monday. Okay, so by the time you're watching this video, this should be Friday. And so after the weekend, they're set to report after market close on Monday. Now, the first thing we're gonna take a look at, as you see here on the screen, we're gonna be looking at a aggregation from Yahoo Finance of analysts. And so here we can see, if we start at this line, there's a total of about 20 analysts that this is reflecting. And we can see that the average estimate is a total of 96 cents per share, and this is on a non-GAAP basis, okay? And so if we look at the low estimate, it's 62 cents, and on a high estimate, it's about $1.16 per share. So this is, this isn't too bad. 116 would actually, I think, be considered a blowout. Keep in mind, there's a lot of things that is working against Tesla this earnings. Besides, the normal FUD and media that's out there, Tesla has to take a rather large impairment hit from their Bitcoin purchase from about a few months ago. So what happens is, the way it works is that because it's classified as an asset that doesn't really have a tangible value, whatever they bought it for, anything that drops below it in the quarter, they're going to have to go ahead and take that as a loss. Now, what the benefit of that is moving forward, so say the following quarter, it kind of resets, and that new bottom of whatever that price was, that becomes the baseline. Okay, now the part that kind of sucks about this is that, let's say that, like last quarter, Bitcoin was up, a hefty amount, almost 100% for Tesla. They didn't get to recognize any of that as profit. So it's pretty much the way it's set up and the way it's rigged is it's seen as an impairment for Tesla on their earnings. And this is actually something that it's very difficult to actually account for whenever trying to come up with these estimates. Actually, Kathy Woods on the B Word interview last night, 2 nights ago with Jack Dorsey and Elon Musk, she had mentioned how this needs to be reevaluated by the bigwigs upstairs as far as accounting practices, because it shouldn't be really seen as an impairment or as a asset that is classified in this way where it only hurts, it doesn't really benefit. So it'll be interesting to see how Tesla accounts for this overall. I'll kind of show you how I accounted for it in my spreadsheet. It's not really the most elegant way to account for it, but I did the best I could. So here we see, if we scroll down, we can see that the average estimate is for about 11.2 billion in revenue, and on the low end, 9.5 billion. So I believe 9.5 billion is about what they had for last quarter. We'll be looking at that in a second here. On the high end, it's about 12.83 billion, and a year ago you could see they're about 6.04 billion. Okay, so I think that's pretty good for now. So we have a general gist of what to expect here, right? So from a revenue perspective, estimate 11.2. From a earnings estimate, right, we have about 96 cents per share. Okay, so let's go ahead and dive over into my spreadsheet and take a look at that. Here we can see the spreadsheet that I created for this Q2 earnings preview. And what we see here to begin with, on the far left, we can see what Q2 of 2020 was. And the reason I like having this up here is it's a good exercise to compare what it was a year prior. So also next to it, I have last quarter's earnings. So with both of these, I was able to make some kind of estimations about what the total revenues and what the earnings per share would be for Tesla in this quarter. So let's go ahead and dive into this and examine some of the decisions and assumptions I made. So first things first is that we already knew what the total delivery units were for Tesla. Now keep in mind, this gets released at the end of the quarter. When the quarter closes, it gets released a couple days later. This isn't necessarily 100% accurate. Normally you'll see this number tick up a little bit, but nothing of significance that warrants us really being too concerned about it. Again, this is just a preview. These are just estimates. This is just a fun exercise, and this is more so for just to get an idea of what could be with the earnings. So here we can see that total automotive sales for the previous quarter was at 9 billion, and I have mine sitting at 9.5 billion. Keep in mind, that's about an 83% improvement year over year. Now, a big chunk of this is mainly due to the fact that we increase pretty significantly from quarter over quarter. So from 184 to 201,000 vehicles. Now keep in mind, the majority of this is probably due to China increasing their sales and ramping up of the Model Y and the Model 3. And part of this is also early deliveries of the Model S. So what that means is high margins when it comes to Model S, Model Y, and Model 3 from Shanghai. Credits. So as far as credits, I just assumed, again, this is estimation. There's no way of actually knowing this. I assumed that they would sell and claim 500 million in credits. This is probably the biggest thing that's just a guess besides the whole Bitcoin impairment. So I went with 500 million. I think this is a rather safe estimate. They might try to sell more, knowing that they're going to have this impairment, or try to recognize more of this up front just to try to wash that out. But again, it's really hard to tell. I think last quarter was a big shock for everyone at the 518, so it's a little lower than last quarter, but I think we're in the same wheelhouse. I find it hard to believe that they won't take in more credits with this Bitcoin impairment at the same time. I mean, if there's any time to really, use the benefit, the leverage of these credits, it would be now with this Bitcoin impairment charge. Now, as far as the energy sales, we've been hearing a lot of news about, solar ramping up. The whole Powerwall with solar is the only way it can be sold now. I've been hearing a lot of rumblings about the Mega Pack and how sales are going with that. So, and then now Tesla just announced their beta virtual power plant with all the Powerwalls for California. So it seems like there's a lot of traction going on here. I don't have a lot of growth in this really year over year, so about 50%. And now that sounds like not a lot of growth, but when we're comparing this to automotive sales, it's not that much. But I think this is a relatively aggressive number from a quarter over quarter perspective. So this may be a bit high, but we'll see. As far as services and other, I imagine that this pares down a little bit this quarter. So I had this at 850. Again, this is still 75% growth year over year. 893 from last quarter. So again, these numbers, sometimes it's just a guesstimation. But I figured that this could be a reasonable number to assume. So with all of that said, total sales, right, we come out to 11.4 billion. So this is the total sales. With this year over year, we have an 89% increase, and quarter over quarter, it's about a 1 billion increase. So scrolling down here, automotive profits. So with automotive profits, I kept this, pretty conservative, I think. So this is sitting at 2.451 of the total profits. So Again, here we have you can see the regulatory credits sold with energy profits. This, I think, still remains negative. I don't think we come out of this 101 million hole that we were in last quarter. And you can see that actually year over year, we are negative 148%. Now, again, I think that with everything that's happened with the Powerwall and solar roof and a lot of the delays and the upcharges that happen, I think that it's going to take about 2 quarters for us to see the other side of that. And right now, I think this is the second quarter out of that 2 quarters to get around it. So I think next quarter, this goes back into the green, if not just in the black, and starts to kind of go back onto the up to the right trend that it was in before. So now services and other profits. So this is where I went ahead and just hit in this Bitcoin impairment charge. I'm actually really curious to see how Tesla handles it. Wasn't really sure what to do with it and how much it'll really be at the end of the day. I assumed about 101 million, to 110 is roughly what I think it'll be total. But we'll have to see what they do, see if they pull any rabbits out of any hats and do any clever accounting to deal with that. But this kind of allows me to be a little more conservative too by throwing this in there and ramping up the services and other profit here. So total gross profit, we come out to 2,245 million. So this is still a very strong quarter, 77% year over year. Keep in mind, Elon did say that he anticipates 50% growth at minimum, year over year for the foreseeable future. I really think that'll go on at least into 2025 to 2027. With 2027 moving on, law of large numbers, I could see us tapering down to about 30 to 40% year over year. But 77% year over year from Q2 of 2020 to Q2 2021 is rather impressive. So this gives us a total automotive gross margin percent of 26. This is a slight dip from last quarter, but nevertheless, I think it's very nominal, and I think 26% is very healthy. Again, imagine if we don't have any impairment, imagine if there's no stock compensation, right? This could be a lot higher. But, just to stay balanced here, keep in mind, this does also, the 26% assumes the regulatory credits sold and, assuming that revenue as well. If we exclude that, you can see here, we set at 22%, which again is still, pretty good overall, especially for a automotive company. And over time, as energy ramps up, as the software side of the house begins to ramp up, we will see this as well go up. I predict that in the future, we'll be seeing Tesla having anywhere from, low 30s to mid to high 40% gross margin percent. Energy, right? Same story. I think that stays negative, and services stays negative. So total gross margin 20%. Now, for some of the real guesswork here, so I'm assuming that a lot of the stock compensation plan that has been accounted for over the last couple quarters, I believe that continues. I don't think that really slows down that much, and I also think that Tesla begins to ramp up their R&D. So for a lot of the stock compensation, a lot of that gets accounted for within R&D and SG&A. So we can see that here. So you can see that although SG&A is slightly down, our R&D is slightly up. So quarter over quarter, we actually bump up the operating expenses. And a lot of this is due to the stock-based compensation. And I do think there is an increase in R&D. The main reason I think that is because of the 4680 battery. I think Tesla has had to do a lot more work than they had predicted. And I do think that they're making great progress, but I do think that that has led to them having to do a lot more work. So if we scroll down here, you can see operating income, that comes out to about 545 million. Operating margin, about 5%. Again, it's a slight tick down from last quarter, about 0.7%. But I think a lot of this has to be understood that there's that one-time impairment charge from Bitcoin. We have a lot of the CEO compensation, right? And again, just playing devil's advocate, we are still counting about 500 million in regulatory credits, which isn't something that we should think of as a reoccurring revenue source, right? Eventually, that's going to stop. That's not something we can rely on in the future. But for now, it allows Tesla to take a lot of their profits and dump it right back into the business for growth. So we'll skip some of this. We'll just get right down to the earnings per share. So if you remember, according to Yahoo, on the high end, they had $1.16 in revenue per share, or earnings per share. And on the low end, they had 63 cents, I believe. Average was 96 cents. My numbers come out to 97 cents, so pretty close to that consensus. Although I will say my revenue is slightly different than theirs. I think they were at 11.5 in total, and I'm at 11.4. So not too far off, but close enough. And I'm sure a lot of that is reflected based on the whole Bitcoin situation and how that's dealt with. So those are my numbers. We'll leave it there for right now as far as my spreadsheet. Again, this is just all estimations. I'm not an accountant. This is just, some engineer who likes to geek out in the finance world sometimes. Now, again, remember, none of this is investment advice. This is just me trying to share with you my model for Tesla and the Q2 earnings coming out on Monday. I really believe that it's important for people who are going to attempt to be very aggressive with their investments, especially if you go all in on one company or two companies, that you really fundamentally understand how their income statements work. And even if you don't know what you're doing, right, that's the beauty of a channel like this one. You can take what I'm doing, copy and paste it, figure out how I came up with my numbers, Google, what does EBITDA mean? What's non-GAAP? What is, all these formulas to come up with your own model. And then from there, that actually becomes a lot of fun. So one, you're learning a lot, but two, you're able to have fun and make estimations about what you think is gonna happen. The nice thing about something like this is that we get solid numbers, more or less solid numbers, of the deliveries of vehicles from Tesla. And then from there, we can extrapolate, right? Maybe you want to take it based on last quarter, or maybe you're taking off trends, or maybe some random thing happens like this whole Bitcoin impairment. And all of a sudden, right, we all have our own models and we tweak things, and we kind of get to see how close we get and where we went wrong. So especially if you're taking this approach, right, the investing against the grain approach of attacking for 10x, 20x type returns, where we go all in into one or two companies and invest aggressively, you should really have your own models. Okay, now if you're not there yet, don't worry about it. That's the whole point of these kind of channels. So you can come here, learn from what we're doing, and improve on what we're doing, right? You should be able to do even better than what we're doing. But again, feel free, copy and paste, take what I have, make it your own, and then you can slowly start to see how these things work and how they impact revenue from a holistic perspective. Okay, again, so the whole point of this episode was just to give a little preview of the Q2 earnings coming out on Monday. Hopefully it's better than what we expected. It should definitely be interesting. It's always interesting with Elon, that's for sure. But so we're gonna go ahead and leave it there. Do us a favor, if you like this type of content, even if you don't, do me a favor, please hit the like button, please hit the subscribe button. It really helps the channel out, and I'll see you guys next week after Q2 earnings. Have a good one. Cheers.